Tesla is doing this morning what Tesla does, which is it's all over the place. A lot of activity for just 40 minutes so far of trading. High of 426, a low of 413, about what it was in the overnights. And just up and down, up and down. Just real quick, I'll check just for the exact moment. Now at 412.27, up $1.83. So it's something's going on. Well, maybe not. Well, yeah, profit taking. Uh, More analysts are getting that Tesla's vehicle shipment count is no longer that relevant. So that I think is encouraging the stock higher. On Friday morning, Kramer's positive statement didn't seem to have a negative effect on Tesla. So he's trying again. And he says that he is buying Tesla and Palantir. So that may be part of what's going on this morning. Or maybe Kathy Wood is selling. That commonly is a problem. And then maybe there just is some folks out there who are taking profits this morning more than there are folks who are buying in. I guess that would be Larry's solution. Anyway, let's see here. Tesla's, well, this is from Barron's. Okay, from Barron's. The EV maker is getting a lift from several areas. For starters, there's Wall Street. On Sunday, Stifel analyst Stefan Gengaro raised his price target on Tesla stock to 411 from 287, from 400 to 411 from 287, and he kept his buy rating. Well, he's really, really right this morning. 411. That no, it's 412 right now, so that's pretty good though. He says, we believe that buying Tesla shares requires vision and patience and the willingness to accept volatility. He isn't wrong. Tesla stock is notoriously volatile, according to Barron's. Coming into Monday's trading, shares were up about 37% since the November 5 election. The move is despite no change in 2025's earnings estimates. Investors are banking on CEO Elon Musk's closeness to President-elect Donald Trump benefiting the EV maker. One way could be, I don't think that's what people are banking on. What they're banking on is that full self-driving is going to become complete. It's going to become unsupervised and that robotaxis are going to roll out. And in addition to that, they're banking on Optimus later this year working in the factories and beginning to ship early next year. So, yes, okay, they're partially right. One way could be if the federal standard were introduced to regulate self-driving cars, which would smooth the introduction of the robotaxi. While we have confidence, this is continuing with that earlier comment from Gengaro. While we have confidence in Tesla's auto business, the significant value creation potential from its AI-based full self-driving capabilities and Cybercab robotaxi underpin our positive outlook. His target price is now the highest on Wall Street, according to FactSet, valuing Tesla stock at about 1.3 trillion. Along with Gangaro's now remember Dan Ives, who we'll talk about, I think we'll talk about in a minute. Dan Ives is also he has a bull case for 2 trillion for later this year. Along with Gangaro's boost, Roth analyst Craig Irwin upgraded Tesla shares to buy from hold. His price target went to 380 from 85. Now I think that's old news. Isn't that? Didn't we already know that? The world has changed, wrote Irwin in a new Monday report, but I think he'd already raised his analysis. He sees benefits from Musk's relationship with Trump and AI computing ushering in growth. Musk's authentic support for Trump likely doubled Tesla's pool of enthusiasts, according to Irwin. Cybertaxi is now faces an Cybercab, not Cybertaxi, now faces an accommodative regulatory environment. Tesla's main AI mission is autonomous driving, a smart co-pilot that aims to solve orders of magnitude more chaos than other products and inform the humanoid robotics program. Whew, that was not well said. With the upgrade, 42% of analysts covering Tesla now are rating it a buy. The average buy rating ratio for stocks in the S&P is around 55%. The average analyst price target for Tesla shares is 248, well under the 412 I just quoted. Along with the improved sentiment on Wall Street, Ashok Elluswamy said the other day, he's, of course, the vice president of AI software, posted Saturday night that version 13 of Tesla's highest level driver assistance software called Full Self-Driving was being rolled out to customers. Most customers are still on version 12. Of course, people with hardware 3 are still on version 12, but apparently now everybody on hardware 4 and is getting 13. The new version upgrades every part of the end-to-end network. Read the release notes. It's alive, says Musk. Tip Ranks reports this. Goldman Sachs Mark Delaney's expectations. The analyst has now lowered his 2025 deliveries forecast from 2.03 million to 2.01 million, so 20,000 fewer vehicles, while keeping his 2026 deliveries estimate of 2.3 million intact. Additionally, and that'll be this year, and next year will be way more than that. Additionally, his 2024 EPS estimate, including SBC, comes down from the prior $2.01 to $2. Man, he is really feathering it here. And it's going to be a lot more than $2. Lastly, mainly due to lower auto deliveries, Delaney has reduced his 2025 EPS estimate, including SBC, from $2.85 to $2.80. All told, Delaney rates Tesla shares a neutral, while his 345 price target suggests a potential downside of 9% from current levels. This is Randy Kirk. Please hit like if you have enjoyed what I've already done or just enjoyed the program in general. Just hit like because you like me. Hit like for any reason, then hit subscribe, hit notify. Regular programming later today. Larry Goldberg around 5 and Brian White at pretty much exactly 7:45. Both of those are California time. Joining Patreon would be a lovely and wonderful thing for you to do. That information is easy and just down below. Just takes a second. Really, it's not complicated. Just about the time this video goes up today, about 7:45 Pacific time, the worst leader in terms of economics, but also social issues as well as freedom, pretty much on every single level, the worst economic leader that I think I've ever seen of a Western nation will resign. Justin Trudeau has overseen the collapse of the Canadian economy. Only 9 years ago was roughly on par with the United States, but now their wealthiest province has a GDP about the same as the worst U.S. state. And their value of their currency is now at about 56%, I believe, of U.S. currency. So if you want to go up to Canada right now, you can buy stuff, especially like things like we were just up there and we were paying $150, a meal that would be $150 in California was $99.99. I mean, that's a bargain. So anyway, he's going to step down. What a shame. Oh, no. How good for Canada. We want you to come back, Canada. It's always better to have your neighbors being having good economies. Then you buy more of our stuff. This is from the real E.J. and Tony. We've quoted him many times before. He says, not only has the Biden administration racked up $8.4 trillion in debt, they've also run down Treasury's cash balance by another $1 trillion. That's a net overspending of $9.4 trillion, which is more than 1/4 of the entire federal debt. And then another group that we quote often, the 𝐑𝐚𝐬𝐽 letter. This is a little bit old news from last week. The ISM manufacturing PMI, the manufacturing PMI index rose to 49.3% in December, but still that's in contraction territory. And it marks a 25-month of contraction out of the last 26, the second longest streak on record. The employment index fell to 45.3, shrinking for the 7th straight month. Now that's manufacturing. We'll talk more about manufacturing in a second. Concerningly, output dropped at the fastest pace in 18 months due to a decline in new orders. Meanwhile, prices paid jumped to 52.5, posting the 11th month of expansion out of the last 12. That's not good. None of that's good. But let's switch to services. U.S. service providers saw, this is not 𝐑𝐚𝐬𝐽 anymore. This is directly from the PMI of the S&P. U.S. service providers saw a rate of expansion in business activity and new orders strengthen further in December amid a greater willingness among customers to spend following the presidential election result. Business confidence perked up. among service providers, with workloads rising. Companies increased employment for the first time in 5 months. Meanwhile, cost inflation eased to the slowest in almost a year, with charges again only up modestly. The seasonally adjusted S&P Global U.S. Services PMI business activity, could they shorten that? Rose for a second month running in December, reaching a 33-month high of 56.8, following a 56.1 reading in November. Companies indicated that client demand had improved, with customers more willing to commit to new projects following the outcome of the presidential election. In line with the picture for business activity, the rate of expansion in new orders also reached its fastest since March. New business was up rapidly in the final month of the year, extending the current sequence of growth to 8 months in services. A further increase in new business from abroad was registered, although the pace of expansion from that was less. The strength of the rise in overall new business meant that backlogs of work accumulated in December. Efforts to limit the buildup in backlogs of work and respond to strong growth of new orders had service providers take on extra staff. A rise in staffing levels ended a 4-month sequence of job cuts, but it was only modest. I think we're going to see modest numbers later this week on all the other jobs numbers. This is a further sign of cost pressures moderating in December. Pace of inflation eased for the 3rd consecutive month. A number of respondents mentioned higher shipping costs, while others reported wage pressures. Yeah, that would make sense. Chris Williamson, chief business economist at S&P Global Market Intelligence, reports it this way. The U.S. economy ended 2024 on a high, according to the latest business surveys. Business activity in the vast services economy, remember that's like 60% or more of the overall economy, manufacturing really more like 20%. Expectations of faster growth in the new year are based on the anticipation of more business-friendly policies from the incoming Trump administration. He's quoted. Goes on to say the improved performance of the service sector has more than offset a continuing drag on the economy from the manufacturing sector, meaning this survey data points to another robust expansion of the economy in the 4th quarter. The strong service sector PMI reading for the December sets the U.S. economy for a good start in 2025. However, a key focus in the coming months will be the potential vulnerability of the economy to any major changes in interest rate outlook, especially as financial services activity has been an important engine of growth in late 2024. Okay, so now let's turn to manufacturing. This breaking news this morning: new orders for manufacturing goods in November down 3 of the last 4 months, decreasing 2.1 billion or 0.4% in December. The U.S. Census Bureau reported today that follows a 0.5% October increase. Shipments up following 3 consecutive monthly decreases were up 0.7 billion or 0.1%, but that followed a 0.2% October decrease. So what we got here is a little bit of up and down with regard to shipments and with regard to back orders and backlog and new orders coming in. The unfilled orders to shipment ratio was 7.07. That's up. That's good. Inventories up would be abnormal in January. Well, this is December. You expect inventories to be up in December. Inventories to shipments ratio was 1.47, up from 1.46 in October. So overall, manufacturing continues to be a drag. My speculation is, hold me to this, put this in your bookmarks, remind me in March or April, I'm expecting durable goods to begin. Now, durable goods out, not counting airlines and cars, although I think cars might do okay in 2025. Airlines, I don't know what's going to happen with Boeing being such a mess. But with regard to cars, it may be okay. But the rest of durable goods, I'm expecting expansion. Now, durable goods is not everything in manufacturing. There's a lot of manufacturing outside of durable goods, but durable goods is a big piece of it. And I'm expecting manufacturing maybe to start perking up later this year, which would help the overall economy. The problem I'm seeing overall, I continue to say this, is housing. Housing, I don't see until mortgage rates come down, and they may. I really can't believe the 10-year bonds are staying as strong as they are and going up again today. It's blowing my mind, as you well know, if you follow this channel. All right, let's go ahead and see what the markets are doing. So Tesla has bounced off those lows. We're back up to 416.68, up $6.24 for the day. But it was up as much as I said at 426 earlier this morning, so down 10 from that high. That would have been up 16, I guess, at one point. I didn't see that, but apparently that was true, or it wouldn't say so right here. All right, so Tesla doing a little better right now. We'll check that one more time before we sign off here in a second. But the rest of the markets are green and tending pretty much upward. The Dow Jones is off a tad. But it's still up 225. NASDAQ up 341, doing very well this morning. NVIDIA is doing very well this morning. S&P up 65, and it's pretty much a straight line. We have got Apple actually up this morning again. Like I said, NVIDIA up $7.17 this morning. Microsoft up $9.70. Meta up $6.53. So all of those, that's why you got the NASDAQ doing so well. People keep talking about this rotation. I'm not seeing the rotation. All of the Cathie Wood stocks are up and quite nicely, actually, this morning. So a lot of green, a ton of green, although the Dow is off a bit, probably on those manufacturing numbers that I just gave you, where the NASDAQ is up, which is heavily service-based. Okay, let's go ahead. Oh, I'm sorry, I didn't do the percentages. The Dow up 0.51%, NASDAQ up 1.79%, S&P up 1.12%, and Tesla up 1.66%. So right now, even with the NASDAQ percentage, which typically it would be up double at least. Okay, let's go on to the bonds. We have the bonds. This is just craziness. I just don't know what I can't understand it. 10-year is up 4.5 basis points at 4.64. Larry asked the other day, is it going to go to 5? No way. Not a chance. But I can't believe it's still going up. Up 4.7. It just ticked up another bit. All right. 2-year is up only 0.8 of a basis point at 4.287. And the 1 month is unchanged this morning. All right. Let's go ahead and look at oil. If I can do this correctly, I'm having trouble with my fingers. All right, here we go. Oil is up 88 cents. It continues to defy gravity also. $74.84 this morning, well above the 67, which is kind of the low of the range. We've got Brent up also this morning, exactly the same, 88 cents at 77.39. Natural gas up 6.77% at 3.581, taking another run at 4. Which it was at one point. Gold, the dip now is 0.46%, but still 2,642, right in the middle of the recent range. Silver up a bit more, 1.8 at $30.60, and copper up 2.88, my goodness, at $4.19, although again, right in its range. Dollar, narrower Trump tariffs are being reported this morning, hurting the dollar a little bit. I think Trump came right back out and said, no, there's no difference. I haven't changed my mind. So yeah, I'm not sure what that's all about. We'll see more about that later in the day. Bitcoin over 100,000 again at 101,680, up 3.45% this morning. And there you go. That's where things sit. So what are we going to do this morning? You're going to like, subscribe, and notify. You're going to watch Larry at 5 o'clock, around 5 o'clock. You're going to watch Brian White and I have a fun discussion, I'm sure, about who knows what at 7:45. And you are going to go down to Patreon and you're going to you're going to become my third $50 a month person. I need one more $50 a month person. I got 2 that are sending me $50 every single month. Those people, Gary, thank you so much. Just keep it up, folks. Another 50 wouldn't hurt. And again, let me mention that on X, I will probably have subscriptions available later this week, and maybe you could subscribe over there. All right, let me see. Wasn't there? Oh, yes. Last night, as usual, you might want to go back and check out my outlook for the week in terms of all of the things that are going to be happening. I'll put that card right up there. And yeah, and let's go back and check Tesla one more time. Up 1.31. That's about where we were, $415, up $5.38. Okay, that's it. It's been great. We'll see you multiple times later today. It has been great talking to you.